Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors, Admiral Markets. It gives me great pleasure to introduce Mr. Darren Sinden, market commentator from Admiral Markets. Darren, how the devil are you, sir?
Very well, thank you, Nick. Lovely day out there, so
yeah,
everything's right.
Except we're sitting in here.
Absolutely.
In terms of the markets, stability, last week, and then obviously the devaluation, I think caught everybody, including myself, offside. Are we going to have any more sort of Google balls this week? Is there anything that's likely to upset the apple cart once more?
There are, there's always potential for that sort of thing, Nick, and you never know really what might come out of China at any stage, and this is obviously a new juncture for them in terms of their monetary policy. So whether it's this week, possibly not, but we probably haven't seen the last of that. And Greece is coming back into the frame, as we'll see in a moment. So, as one thing sort of perhaps just edges over the horizon, some other potential problem comes looming the other way. There's also some very interesting slides doing the rounds from a chap at Citigroup about volatility and the lack of liquidity in the wider markets. And I think if you get a chance to look at those, it'd be well worthwhile. Perhaps we can throw some of those in perhaps the show tomorrow. Understood.
Okay, well, we've got a number of slides you kindly sent us. Let's kick off with data released over the European session. What caught your attention this morning?
Okay, well, first of all, a couple of bits of data out of the Far East prior to the European Open. First of all, a survey by Bloomberg of economists that cover China found that Chinese GDP was actually likely growing at just around 6.3% in the first half of 2015, and I think slightly higher than that was the idea for the second half. Anyway, that basically is the best part of 10% under the official forecast or official.
But I think the market would take that GDP number well. Because there are economic commentators talking about sort of 3%.
Well, it might well be as low as that. I mean, it's very difficult to say how much is double counting and whatever. But certainly, it's the first inkling that certainly the official numbers are removed from reality, shall we say? And then you also have to wonder about some of the data that's coming out of Japan this morning. We had GDP on an annualised basis in that sort of American style. This is for the second quarter, the year-on-year figure, down 1.6%, which was better than the forecasted minus 1.9%. But you look back and at the revised number, the prior read, plus 4.5%,
right,
and you think, how on earth did they arrive at that point? So, it's probably not worth spending too much time going back over that, but the problems in Japan are not going away, and we'll be talking about that for a long time to come, I'm sure. Then another country that's not without its issues, but for a different set of reasons, is Switzerland. Swiss retail sales for June, year on year, came in down minus 0.9%, well ahead of the forecast minus 0.6%. But a considerable improvement on the prior read of minus 1.8%. Nonetheless, but the problems in Switzerland are well known, and they're, as I say, the deflationary aspects of their economy still not going right, it would seem. And then the other big news today, really, although it's not going to actually happen until Wednesday, I don't believe, is that German MPs are going to vote on the Greek bailout. The talk was that Mrs. Merkel had changed her travel plans because she wasn't certain that she should be out of the country, as one or two of her own party members are sort of threatening to revolt against her. A lot of people in Germany will find it quite hard to vote, I believe, in favour of the bailout without IMF support. Having said that, they're completely against the idea of having a haircut as well. They would perhaps accept extension to maturities and some other help for the Greeks. But so it could be quite a fraught couple of days for Angela Merkel as that bill tries to steer its way through the German Parliament.
Understood. So let's now take a look at the European movers this morning. What's on the board?
Well, it's all a bit quiet on the Western Front, really, but I thought I'd flag a couple of broker comments. First of all, Rio Tinto, ticker RIO in London. Goldman Sachs reiterating a sell recommendation it has out on the name, believes the company has entered a period of negative earnings momentum, and that what it describes as the elevated multiples it currently trades at are unjustified. Their price target here, £19 versus the current £24.54.
Big downgrade.
Yeah. Well, I mean, it's just a reiteration of that downgrade, but you you can see for yourself the price targets are well below where they are. And then going the other way, BMW in Germany, conveniently ticker BMW. Barclays have upgraded to overweight, 118 euros price target. They say it's their top pick for earnings growth in the auto sector in 2016. And a very interesting soundbite from the report that took my eye was that even if China earnings were zero, which they don't believe they will be, they believe that BMW are still worth 91 euros a share against the 87 euros 45 they were trading at shortly before we came on air.
Understood. Okay, so let's talk M&A, rumours and movers.
Okay, well, it's quite an important story in the news headlines this morning, and that is that General Electric, or GE, of the US is going to be sort of likely to get EU approval today for, or very early this week if not, for its purchase of Alstom, which is ALO in France, power business. Alstom reacted by rallying around 5.89% to 27 euros 42. This deal's been on the table for quite a while. GE is looking to pay around 12.4 billion euros, or about $13.8 billion for the power division. But it's been this deal has been subject to a massive amount of scrutiny. The French have been all over it because obviously they're very protective of their national champions, and the EU have also had competition concerns,
right,
and monopolistic worries about it. GE is said to have offered concessions to the EU to allay fears, although they haven't expanded on as to what those concessions might be. The timing is quite interesting because it will come almost exactly around the 14-year anniversary of GE's attempt to buy Honeywell for what still is a huge amount of money, $42 billion. But that was rejected by the European Commission, despite the deal winning US competition clearance approval. And Washington really has been lobbying hard in Europe to try and get what it believes is a level playing field on M&A. Although it's interesting to note that Washington will still weigh in occasionally when a Chinese company tries to buy a US one. So it's not, there's a bit of do as I say, not as I do there perhaps. But anyway, so if the deal goes through, it will mark a historic turning point, and it seems likely it will now. And perhaps we could see more, transatlantic M&A going forward.
Understood. Okay, so let's turn our attention to US data points to keep an eye on today.
A very thin calendar as far as actual data today. The sort of only thing of note really is the Empire State Manufacturing Survey. This is the New York Fed's read on local manufacturing businesses. For August, forecast read of 4.75%. That's against the prior level of 3.86%. So small gains predicted. The new orders component of this is a sort of a conglomerate survey, has been negative in 4 of the last 5 months. So it'll be interesting to look at that. But I also felt we should look at the sort of the near-term history of the number. And if we go back to September 2014, we were talking about a read. Admittedly, it was a high, but of 27.54. So we're well below those September 14 highs. Yep. Some move in the upward direction would be good news for the US economy. Anything else, perhaps it's scratching your head time again and maybe lower for longer. And then in terms of other data this week, it does start to fill out. We've got housing starts and existing home sales, CPI data, and also flash manufacturing PMI, and perhaps most interesting of all, Wednesday, the FOMC minutes.
Okay, let's wrap up now with the US pre-market movers and levels.
What I've done here, Nick, is because there's not too much happening pre-market in US equities, but I just thought I'd flag a couple of stocks that moved higher on Friday and in fact closed at 52-week highs. So the first one is Cisco Corp, not to be confused with the networking and
CISC.
Yeah, yep. This is SYY in the US. $4.38, up 7.42% as of Friday. And Nelson Peltz and Trian Fund Management have disclosed a 7% stake in and seeks board changes at the food distributor. Nelson Peltz has obviously got a track record of activism within the food industry. He had a tilt at several names, so hence the movement there. And then staying in the same sector, Post Holdings, which is POST in the US, closed at $66.28. That was up 6.27% on Friday. Again, a new 52-week high. And hedge fund Blue Ridge Capital has increased its stake in this maker of nutritional and dry foods, added another 430,000 shares over the last quarter, and now owns approximately 4.36%. The guy that runs Blue Ridge is well followed because he used to work for Julian Robertson, who was very successful at the Tiger Fund, so he's got a keen following and both of those I would suggest will be stocks to keep an eye on going forward.
Understood. And in terms of the levels to watch today, these are the cash levels, aren't they?
They are not much movement, particularly in European equities. We've probably tightened some of the levels up slightly from Friday, but 65.20 on the downside now for FTSE, plays 65.90. The DAX probably one of the better performers today, but still not wildly outside of our range. So 10,990 is our downside level, just tighten that slightly, plays 11,153 to the upside. In the S&P, in fact, we don't change the S&P range at all from Friday, so 2076 plays 2094, and we traded nicely within that over the session. The Dow, just tightened it here slightly, moving up to 17,390 on the downside, plays 17,492 to the upside. Again, not much excitement in currencies this early part of the week. 110.70 now, our downside level in euro dollar, plays 111.24 to the upside. The Aussie seems to be holding in there, 73.35 on the downside, plays 73.96 to the upside. Dollar yen, a little bit of the sparkle has gone out of that sort of yen weakness trade, although it did ease slightly on that GDP data, but 124.10 now. On the downside, plays 124.62 to the upside. Remember, we're watching 123.70 and 125.00 outside of those two supports and resistances.
And good old cable.
Yeah, cable 156.00. I've just gone with that today for a bit of round number excitement. Plays 156.60 to the upside. Again, really looking for cues. Perhaps the German vote on the Greek bailout will be the deciding factor this week. Yeah.
Understood. Okay, Darren Sinden, market commentator for Admiral Markets. Thank you very much for your thoughts. That wraps up the Wall Street crossover show. We'll be back at the same time tomorrow, 1 p.m. Have a good day. Thank you.